It's keep calm and carry on, to use a British expression. That's the characterization I would give of the chairman's statement today. Certainly, certainly the coverage of the uninsured deposits of Signature and Silicon Valley Bank have calmed the prospects of contagion and further panic runs on other banks. However, there is a significant number of banks that potentially have a level of uninsured deposits that could result in them getting into trouble. And I do believe, therefore, that the speed with which the investigation of what happened in these cases takes place is very important. It has to be thorough, but it has to be swift. And no doubt there will be regulatory tightening that will occur as a result of the failure of these banks. You'll recall that the regulations were loosened in 2018, partly at the behest of Silicon Valley Bank management, so that banks over 50 billion in assets would actually be alleviated of regulations that were in place, and the limit was raised to 250 billion that conveniently enabled Silicon Valley Bank to escape the regulations. One final point, Mike, I would say I was quite interested in the fact that in his statement he explicitly said that management had failed at Silicon Valley Bank. But remember that that management is also overseen by regulators and supervisors within the Federal Reserve System. And it's quite surprising to me to have learned that the CEO of Silicon Valley Bank was sitting on the board of the Federal Reserve of San Francisco. So I think, the buck is going to stop not at the chairman, but probably at the board level in San Francisco.